It's pretty fascinating when you think about the companies really holding up global healthcare, right? There's this one massive player handling billions in pharmaceuticals every day, and honestly, many of us probably haven't even heard of them. Today, we're diving into Cencora, Inc. They're a global pharmaceutical solutions organization.
Yeah, and we've got their latest results, fiscal year 2025, third quarter, and their big 10Q filing, the detailed report they have to put out. So our mission here is to really unpack these documents for you, pull out the most important bits of info, the insights into how Cencora is doing, their strategy, and maybe what it tells us about the wider pharma world.
Exactly. We'll look at where they're actually growing, what's driving it, and importantly, some of the, pretty significant challenges they're dealing with. So whether you're just curious about how the whole pharma supply chain works, or maybe you're prepping for a meeting, or you just find big business interesting, well, this deep dive should give you some surprising facts and a clear picture of a company that's right there at the heart of healthcare. And we also want to tackle this big question. How does a company this huge manage, ongoing legal issues
While also hitting record growth and expanding. It's quite the balancing act.
It really is. So let's start with the big picture, because Cencora's Q3 financials are, they're incredibly strong. They're
to $4?
Yeah, up from $3.34 last year. That's a really significant jump, like you said.
Huge increase.
And it shows they're not just looking back. They've actually raised their forecast, their guidance for the full fiscal year 2025 on that adjusted EPS number. That signals some real internal confidence, Their CEO, Robert Mark, he basically said the same thing, talked about strong financial results driven by their, quote, pharmaceutical-centric strategy and focus on growth priorities.
Okay, customer-centric solutions, partner of choice. I saw those phrases too. But what specific things did March point to? What are the actual strategic drivers making these numbers happen beyond just, growth priorities?
Good point. You mentioned a few key areas. Digital transformation, that's everywhere now. Investing in their people, their talent and culture. Focusing investments on growth opportunities and boosting productivity. So if you connect the dots, it's about making their main business run better while also expanding smartly. And the numbers really back that up. Gross profit, up over 20%, hitting $2.9 billion. Operating income jumped 29% to $2.9 billion. And even the standard diluted EPS, that soared by 45.5% to $3.52.
Those are some serious jumps. And I noticed something else in the capital structure details. Their number of shares actually went down slightly by about 2.4%. What's that about?
Good catch. That decrease in shares outstanding down to 195.2 million. That's usually because of share buybacks. The company's buying its own stock off the market.
Okay, so why do that?
Well, it reduces the number of shares out there, which can boost the earnings per share for everyone else holding stock. It also kind of signals to the market that management thinks maybe the stock is a good value, or they're just committed to returning cash to shareholders, often seen as a sign of confidence.
Right, makes sense. Okay, so let's dig a bit deeper now. What's actually, driving these big numbers within their different business segments?
Okay, let's start with the biggest piece, the U.S. Healthcare Solutions segment. That's the engine. Revenue there hit $72.9 billion. That's up 8.5%. And the main reason, overall market growth, mostly just selling more units. But here's where it gets really interesting. Sales of GLP-1 drugs, the ones for diabetes and weight loss that are everywhere, now they added $1.4 billion just by themselves.
$1.4 billion from just that class of drugs.
Yep. That specific contribution was up 18.6% from last year's Q3. It's not just volume, it's a strategic hotspot for them.
So Cencora is basically riding this huge wave with the GLP-1s. It's like the pharmaceutical equivalent of having the biggest blockbuster movie. That kind of growth in a specialty area could really shape their future revenue, couldn't it? Cement their position in those high-value areas.
Exactly right. And it feeds straight into the bottom line for that U.S. segment. Their operating income was up 29.1% to $0.9 billion. That profit increase came from higher gross profit generally and also from a big acquisition they made.
Okay, so the U.S. side is booming. What about internationally? Their international healthcare solutions segment saw revenue grow too, right? Up 10.5%.
That's right, up to $7.8 billion. Mostly driven by more sales in their European distribution business.
But wait a second. Revenue up over 10% internationally, but you said operating income was down almost 13%? to $156 million? That seems off. How does that work?
Yeah, that's a sharp observation. It is a divergence. The reports point to some issues in their global specialty logistics business and also their specialized consulting services abroad.
Ah, okay.
So while the core distribution in Europe seems strong, these other international ventures are dragging down the profitability right now. Could be higher costs, maybe pricing pressure, something like that.
Got it. And you mentioned a key acquisition earlier. That was Retina Consultants of America, RCA. They bought 85% back in January for, what, over $4 billion? How does that fit in?
Yes, a major move, and it was a primary reason the U.S. healthcare solutions gross profit margin went up. The idea is it strengthens Cencora's ties with community healthcare providers and boosts their leadership in specialty pharma. Think of it as moving deeper into specialized care delivery, not just pure distribution. And RCA itself added $1.4 billion in revenue just since they bought it in January, so pretty immediate impact.
Makes sense. And beyond buying companies, they've also been working on efficiency.
I saw notes about costs from their name change to Cencora, plus these non-recurring expenses for strategic projects, technology upgrades, consultant.
Exactly. Trying to...
Okay, let's shift gears a bit. Talk about Cencora's overall financial health, debt, cash flow, how they're treating shareholders.
Right. So operating cash flow actually decreased by $1.7 billion compared to the same 9 months last year.
Decreased. Why?
It was mostly due to shifts in working capital. You know, the timing of when they get paid versus when they pay their bills, accounts receivable and accounts payable. It's pretty common for these huge companies. Those timings can swing things around quite a bit temporarily. Interestingly, at one point during the period, they borrowed up to $5.1 billion just from their short-term credit lines, the revolving and securitization facilities. Shows you the scale of cash they manage day to day.
And they're definitely spending on the future. CapEx, capital expenditures, were over $400 million in those 9 months. And they expect to spend about $600 million for the whole fiscal year, mostly on distribution centers and tech.
Yeah, clearly investing in growth. And their debt structure reflects that push for growth and acquisitions. They expanded their main flexible credit line, the multi-currency revolving credit facility, nearly doubling it to $4.5 billion and extended the term out to 2030.
Okay, so that's like a giant credit card for the business.
Pretty much, yeah. They also increased another facility where they borrow against their receivables up to $1.5 billion. And remember that RCA acquisition, they funded that partly by issuing $1.8 billion in senior notes, basically bonds, back in December 24, and took out a $1.5 billion variable rate term loan in January 25.
And then more debt. They issued €1 billion worth of notes in May this year. Just for general corporate purposes, that sounds like a lot of borrowing.
It is a significant amount of new debt, yes. And as you'd expect, their net interest expense went up quite a bit because of these new borrowings and, well, higher interest rates generally. But to their credit, they did make some early payments on that term loan, paid back $200 million ahead of schedule. So they are managing it actively.
Okay, so managing debt, but still focusing on shareholders. I saw they authorized a $2 billion share buyback program back in March.
It did, and they've already bought back about $435 million worth under that program just in these 9 months. Plus, they increased the quarterly dividend again, up 8% to 55 cents a share.
Right. So even with big investments and, as we'll get to, these legal things, there's still returning cash to investors.
Exactly, it shows that commitment.
Okay, let's talk about those challenges.
Yeah.
Because the opioid litigation, that's a huge shadow, isn't it? It really makes you think about the responsibilities and the costs for these big distributors.
It absolutely is a huge shadow. Cencora is still involved in tons of lawsuits and investigations related to distributing prescription opioids. Now, they did sign on to that big distributor settlement agreement, which started in April 2022.
The goal was to resolve most of the lawsuits from states and local governments, and it's been pretty comprehensive. As of June 30th this year, 48 out of 49...
$4.7 billion. And it's not like they paid all at once. It's spread over 14 years. But still, they expect to pay out over $4 $416.8 million, specifically just before June 30th, 2026. So it's a very real, ongoing financial wave.
So even with that big settlement, are there still individual cases or other related legal battles going on?
Oh, absolutely. It's not completely over. For instance, there was that case in Baltimore, Maryland. A jury found them liable for creating a public nuisance.
But then the court stepped in and significantly cut the damages amount Cencora might have to pay. They're still figuring out the next steps there, maybe appealing. It just shows how unpredictable these things can still be.
Some parts of that case got dismissed claims from before October 2018, but the rest is moving forward. They're in the discovery phase now, gathering evidence with deadlines stretching into 2026 and even early 2027. Cencora strongly denies the allegations, naturally, and says they'll defend themselves.
And it's not just opioids, right? There were other legal things mentioned.
Correct. They reached an agreement, sort of in principle, to settle claims involving their animal health business, MWI Veterinary Supply. That's about $49 million.
Set aside. And there was a subpoena related to another subsidiary, U.S. Bioservices, about billing, but the federal claims there got dismissed.
Okay. Now, on the flip side,
Yes, that's right. They received some gains from settling antitrust lawsuits they were part of against pharmaceutical manufacturers. They got $9.5 million in this quarter, Q3, and about $231 million over the full 9 months ended June 30th. That money gets recorded as a reduction to their cost of goods sold. So it essentially lowers the cost of the drugs they sell, which helps their profit margins. A nice little offset, as you say.
okay, so legal battles ongoing, some wins, some significant costs. What about just general market risks? Stuff beyond litigation?
Well, standard stuff for a global company. Foreign currency risk is one they deal in pounds, euros, Turkish lira, Brazilian real, Canadian dollars. They try to hedge some of that by holding debt in those currencies. Interest rate risk, obviously, with all the debt we talked about, they use a mix of fixed and variable rates to manage it. Broader economic conditions and inflation are always a factor. A downturn could hurt prescription volumes, and inflation has definitely pushed up their operating costs, particularly outside the U.S. And geopolitical stuff, the conflicts in Ukraine, Israel, and Hamas, they're watching it, but say it hasn't had a material financial impact so far.
All right, let's wrap this up then. What's the final outlook? How are they expecting the rest of fiscal year 2025 to shape up?
Okay, so based on these strong results, they've updated their forecast for the full year on an adjusted basis. They're now expecting overall revenue growth of around 9%.
Okay, tightening the range a bit from the previous 8-10%.
Exactly. For U.S. healthcare solutions, they see revenue growth at 9-10%, slightly narrowed down too. But for international healthcare solutions, they've actually raised the revenue growth forecast, now expecting 6-7% growth, or 7-8% if you strip out currency fluctuations. That's up from 3-4% before.
Interesting. So international revenue looking better than expected. What about profits, the adjusted EPS?
Also raised. The new range is $15.85 to $16 per share, up slightly from $15.70 to $15.95. And adjusted consolidated operating income growth is now forecast at 15-16%, boosted from 13.5-15.5%. So overall profitability looking stronger.
Driven mainly by the U.S. side.
Seems like it. U.S. Healthcare Solutions operating income growth is now pegged at 20-21%, a nice jump from the previous forecast. However, for the international segment, despite the higher revenue outlook, they now expect a slightly larger operating income decline, around 6% down, or 5% excluding currency effects. Before they thought it might be closer to flat or only down a few percent.
So that divergence we talked about earlier is expected to continue. Higher international sales, but lower international profit.
Looks that way, yes. And one last thing, their adjusted effective tax rate is expected to be slightly lower, around 20.5% to 21%.
Okay, so this deep dive really shows Cencora as a company that's, well, pretty skilled at navigating this incredibly complex global healthcare world. You see resilience, you see smart strategic moves, especially riding that GLP-1 wave and the RCA acquisition. The numbers are impressive. But then you have this other side, the ongoing multi-billion-dollar litigation, especially around opioids. It really makes you wonder, doesn't it? What does this ongoing negotiation of responsibility and financial burden tell us about how pharmaceutical distribution is evolving, especially now with so much scrutiny and focus on public health crises? And what could all this mean for the future shape and maybe even the profitability of the entire healthcare supply chain down the road?